There's two big reasons the stock market went down last week. The first major reason is the unbelievable, nightmarish cabinet picks that Trump has employed. The stock market tanks as Trump unveils nightmare cabinet picks. Remember when everyone was excited the stock market spiked after Trump's election win? Well, it turns out it was very short-lived. The stock market lately has gone down 5 days in a row, which is the first time I believe it's done that since before the pandemic. For my part, I made about $50,000 and I took the money and ran, which I think is going to be my investment strategy during the Trump era. An example of his incredibly poor picks is he nominated Robert F. Kennedy Jr. to head the Health and Human Services Agency. Trump officially gives RFK Jr. a chance to destroy the country's health. Donald Trump has formally offered brainworm-infested vaccine truther Robert F. Kennedy Jr. a role in his cabinet. This man is against putting fluoride in the water, and he's against vaccines, and the biological companies, the biotech companies, and the health companies have all gone down. As can be seen from the chart, the healthcare sector took a nice dive after he was nominated, and I think it will continue to dive if he actually makes it through Senate confirmation hearings. The second major factor Trump will not be good for the stock market has to do with tariffs. Have tariffs ever been significant before in United States history? They were very significant in the 1800s and up till the 1930s when they passed the Smoot-Hawley Tariff Act. And of course, it was passed by Republicans. The Tariff Act of 1930, commonly known as the Smoot-Hawley Tariff or a Hawley-Smoot Tariff, was a law which implemented protectionist trade policies in the United States. Sponsored by Senator Reed Smoot and Representative Willis Hawley, both Republicans, it was signed by President Herbert Hoover on June 17, 1930. The act raised U.S. tariffs on over 20,000 imported goods. The tariffs under the act, including duty-free imports, were the second highest in United States history, exceeded only by the tariff of 1828. The act prompted retaliatory tariffs. Hey, if we put tariffs on other countries, guess what? They can put tariffs on us, and we can have a trade war, which makes everything worse for everyone. Isn't that great? The act and tariffs imposed by America's trading partners in retaliation were major factors of the reduction of American exports and imports by 67% during the Great Depression. If they place tariffs on us, it's far worse. We buy far more from other countries than we export. Economists and economic historians have a consensus view that the passage of the Smoot-Hawley Tariff worsened the effects of the Great Depression. The Hawley-Smoot Tariff and the Great Depression, 1928 to 1932. In the 1920s, the focus of trade policy shifted from protecting manufacturing to protecting agriculture. Congress struggled to find the right way to assist farmers and relieve farm distress, turning to a tariff revision after President Coolidge vetoed price support legislation. The resulting Hawley-Smoot Tariff of 1930 proved to be the most controversial piece of trade legislation since the Tariff of Abominations in 1828. The subject of heated debate during its difficult passage through Congress, the legislation helped push the average tariff on dutiable imports to near record levels just as the economy was sliding into the Great Depression. The early 1930s saw an unprecedented contraction of world trade, during which time many other countries retaliated against the United States and significantly increased their own trade barriers. The Hawley-Smoot tariff had far-reaching consequences, and it marked the last time that Congress ever set duties in the entire tariff schedule. So the tariff strategy has been proven to be ghastly wrong, and he's returning to a failed 1930s policy that increased the Great Depression. This is history that rhymes, and it's not great poetry. Trump has floated several tariff ideas, including one impossibly high hike on imported goods of between 200 and 2,000% that experts believe would drastically spike inflation. Businesses across the country have balked at his numbers, arguing that it will be Americans, not foreign countries, who pay the price, readying themselves for a potential second Trump administration. Companies whose business models rely on foreign suppliers, from the auto industry to some of the nation's most popular clothing lines, are planning to introduce price hikes on their products. They're already getting ready to increase their prices. Trump has also proposed a more modest 20 to 60% plan in which a potential second Trump administration would impose a 20% worldwide tariff alongside a 60% tariff on Chinese goods. But even that plan would prove devastating for the economy, according to an analysis by the Nonpartisan Tax Policy Center, which found that it would lower household incomes by an average of $3,000 in 2025. Surprisingly, the great news and good news from Trump is his effect on Bitcoin.
Move we're seeing in crypto, a view that the dollar is going to be challenged because of our high levels, our high deficit levels. And then what if President-elect Trump makes good on his promise to turn this country into some form of Bitcoin superpower and the government is buying crypto assets? Like, what happens to prices? What happens to this digital thing out there in the ethosphere?
I was extremely encouraged. I was delighted. This was a turnaround for President Trump to support the crypto community. It was brilliant. I think that the whole decentralized finance movement does reflect less trust in government management of money. And I think that's healthy. I think we need to challenge whether or not we want to have government use money, which I consider private property. You earn it. I consider it a moral contract between citizens and the government, that the money perform as a meaningful unit of account and a reliable store of value. I think it's very healthy to challenge the protected status of the dollar as our legal tender by allowing continual innovation in the sphere of alternative currencies. I'm particularly intrigued with stable coins. I want the dollar, I don't think it's a choice of the dollar versus crypto. I want to capture the efficiencies of blockchain technology, which I think works much better for individual consumers. But I think the dollar can be connected to it, but through private sector innovation, through stable coins and alternative efforts coming forward to say, how can we link to the dollar in a way that strengthens the dollar? Ronald Reagan, he made a commercial once when he was first running for president. He said, my first priority as president will be to make the dollar the most trusted currency in the world. I think that should be our goal. And I am very willing to have the discipline. I mean, we believe that competition brings about a better product. So let's have competition. Let's have competition. And I do not want a Federal Reserve digital currency. I think a central bank digital currency would be a monopoly that would be terrible. But I do think that we should keep encouraging it in the private sector, and I welcome the openness of the incoming Trump administration to the cyber community and to crypto.
Trump was originally against crypto, but Trump doubled down on his crypto views in the run-up to his second presidential victory, vowing to make America the crypto capital of the world, alongside a Bitcoin reserve. And that reserve could be as big as $100 billion. The president-elect voiced his intention to foster U.S. dominance in Bitcoin mining and vowed to fire SEC Chairman Gary Gensler on his first day in office. Gensler has been a driving force in the SEC's crackdown on crypto companies, with the majority of the sector believing he has been too aggressive in his enforcement actions. Legal experts claim Trump will not have the power to fire Gensler directly. Instead, he could appoint a new commissioner to lead the SEC and pursue policies aligned with a pro-crypto agenda. One of the most exciting things is Senator Loomis' proposal for a Bitcoin Act to sell Fed's gold as Bitcoin overtakes silver. She wants the United States government to sell some of the gold reserve and replace it with Bitcoin. Cynthia Loomis, self-proclaimed Bitcoin senator and a close ally of Donald Trump, has suggested selling some of the government's gold to fund the president-elect's proposed Bitcoin stockpile. The Republican senator's bill will help the U.S. acquire 1 million Bitcoin without increasing its government deficit. 1 million Bitcoin is 5% of all the Bitcoin in the world. The cryptocurrency in question recently overtook silver to become the world's 8th largest asset. It's getting to be a very big deal. The reserve would function similarly to traditional gold reserves, positioned as a hedge against inflation and as an alternative to fiat currency, which Trump argues is subject to devaluation due to policies like high government spending and money printing during crises. Trump and his allies argue that holding Bitcoin would reduce the national debt in the long term, especially if Bitcoin's value rises significantly, which it has recently. Upon his first announcement of the reserve, the president-elect did not mention buying 1 million Bitcoin, but instead said the government would hold 200,000 tokens it had already seized. Selling gold. The proposed bill from Loomis would see the government purchase 1 million additional Bitcoin over 5 years, representing 5% of the global total supply. It's considered to be a win-win because it literally isn't costing anything if you consider we have a large gold reserve and we're simply shifting part of the gold reserve to Bitcoin, which goes up in value generally. I trade Bitcoin through the Fidelity Bitcoin Fund, whose symbol is FBTC, and in the last month, it's gone up. It was in the 50s, and now it's at 80, so wow. And since the beginning of the year to date, it's up 90%. So Bitcoin has really gone up. Bitcoin itself was trading in the 50,000s, and it's gone up to about 91,000 at the time of my recording this. Another investment that has defied gravity is Palantir, symbol PLTR. It started going up when it was recently admitted to the S&P 500, but now the big news is that it's going to move to the NASDAQ and become part of the NASDAQ 100. It's going to be part of the QQQ, the 100 largest companies on the NASDAQ. Palantir shares rallied to fresh record on plans for a move to the NASDAQ. Shares in Palantir Technologies were up more than 6% on Friday, hitting a record high after it announced late on Thursday that it would list on the NASDAQ and expects eligibility to join the NASDAQ 100 index, the QQQ. The data analytics software company said it would switch its stock listing from the New York Stock Exchange and begin trading on the NASDAQ on November 26, which is a Tuesday. As we look at the chart on Palantir, what's amazing is how it levitated on Friday. Now, Friday on the NASDAQ went down 427 points on Friday. And in the aftermarket, it went down another more than 500 points. But Palantir, it went up 11%, over 11% during the day on Friday. And in the aftermarket, went up another 1%, over 1% in the aftermarket. So it truly was a matter of levitating. And why is it doing this? It's because the short squeeze is on. Don't you love the bears? I love the bears so much, I could just squeeze them. And that's when you get levitation like this on a stock that has a price to earnings of about 300, it's a short squeeze. Rationality tells them, we should be able to short this stock. It's overvalued so bad. But if you got a crowd following this that loves this stock, and I think there's a lot of retail traders that do, they will squeeze the shorts, and it's just getting squeezed to death. Now, if the general stock market starts to seriously crash, this will be a primary casualty, which is why I want to keep a stop loss on it always and watch it in the after hours as much as I can. But its relative strength is 83. It's overbought, but no one cares because they're taking advantage of the short squeeze. Palantir has gone up an astounding 283% since the beginning of the year. Logic says there's no way it should have done this. But I'll tell you a little secret. Logic only gets you about so far in the stock market. A lot of it is emotions. A lot of it is FOMO. And you got to know when to FOMO and not to FOMO. One of my favorite trades is Berkshire Hathaway, BRKB, and it's managed to avoid the Trump troubles of the last week and actually went up. And since the beginning of the year, it's up a solid almost 32%. Its relative strength is 59, almost 60. So that's good. It's just a good, solid stock. I consider it a relatively safe stock and a stock for the times. I think we're going to have inflation if he implements tariffs as seriously as he says he's going to. And I think it's going to be a large-scale failure. But I think Berkshire Hathaway, they just invest in the obvious industrial stocks, and they will probably do okay, as they have continued to do okay. And so, like I say, it's a safe stock. It's always been a favorite of mine. Thank you for listening.